Just before we move on to how West African equities markets closed last week, let's take a look at the trade data released over the weekend. Now, according to Nigeria's National Bureau of Statistics, the total value of Nigeria's external merchandise trade in the second quarter of the year amounted to 5.3 trillion naira, up 4.8% from the previous quarter. Now, the change is as a result of an increase in the value of exports, which jumped by 8.4% to 3.7 trillion naira. Now, we'll review what these numbers could mean for the Nigerian economy going forward with Bismarck Rewane, Chief Executive Officer of Financial Derivatives. Thank you so much, Bismarck, for joining us. It's always a pleasure. Now, let's talk about that. Let's first of all look at the factors responsible for this increase in Nigeria's Q2 external merchandise, which is up 4.8% to 5.3 trillion naira.
The price of oil went up, but our production went down. If you look at the Q2 GDP figures, they actually came down because oil production came down. However, we were helped by the increase in the price of oil. So even for the lower amount of output, we got a higher value. So our terms of trade increased, our exports values increased, our import values decreased. Therefore, we had a balance of trade surplus.
Well, when was last time we had this this scenario where we saw, trade exports perhaps not too significantly up, but at least we had a reduction in imports?
We had that in the year before now, that is, and last year we had that same situation where exports, at that time the question of oil theft hadn't become predominant. So price of oil was up, output was up, and actually outflows were down. So what happened? We saw our reserves go up. This time, you had an increase in the value of trade and terms of trade. However, your reserves remain flat, which means that payments on invisible items actually increase outwards, which puts the economy in a sense of vulnerability.
So what exactly does that mean for the economy? I mean, because if we're having our exports, going up, imports reducing, obviously we're getting more.
You have more dollars.
More dollars coming in. At the same time, we're having reserves declining.
Yes, however, because of the fear of an exchange, the speculative attack on the naira, you see that that's beginning to actually result in an outflow of money. Also, fiscal spending. Some amount of government payments is not accounted for in the trade figures. Therefore, if you add that to it, you find that 1, fiscal overdrive, 2, reversal of hot money has led to actually stagnant, some stagnant level of reserves, and in fact, reserve depletion. The reserves are at $46.7 billion right now.
So what does that mean? I mean, how do you see the monetary authorities dealing with this
well, they have their work cut out for them. The MPC is meeting next week. You have to deal with 1, the fact that even with a positive balance of trade, you are having a pressure on the currency. 2, you are beginning to see, if you look at the export destinations, you find that the U.S. has now come down, right? And also the flow of trade has shown that Nigeria controls about 5.5% of total world trade, but also imports only about 0.3% of total imports, which means that you are vulnerable to any movement in the terms of trade against you.
But what about, I'm also keeping in mind that we've actually seen strong demand from countries like India and China, even though we have seen, especially India, a decline in GDP growth on a quarterly basis. Yes. But there's been some strong demand for some of our crude grades.
No, the oil market is in balance. That is, there's balance out there. However, long term, you begin to wonder what will happen if the Syrian issue, because there was a risk premium last month, in the month of August, throughout the hype about whether there was going to be an attack, and into September, we saw the price of oil went Brent and Bonny went all the way to 117, 118. So we'll get that spike, but now it's come down to about 111, and it's likely to go down to 105. If this happens, then you have to ask yourself, how can you get your production up to 2 or 2.2 million barrels?
To take advantage of this high
price. Take advantage of the high price. Now that the price has come down, we now need the production to make up for it. If not, we're going to see some reserve depletion and continued speculation and attack on the naira.
Okay, we're still talking about the naira. We've seen the naira, as you mentioned, on this serious attack, still hovering between 162, 163. I mean, we've actually seen it go as high as 165 now. What does that mean going forward? I mean, how the CBN or the MPC is going to take that into account next week when it meets?
When the pressure becomes unbearable, the CBN will have to concede and allow for a minimal depreciation, not a devaluation. Because if you look at other currencies, emerging market currencies have all lost about 11% this year in the last quarter. So if the Nigerian naira loses 1 or 2 or 3%, max, maybe 2%, maybe 2, 3, 4 naira, it's not gonna bring the world to an end. I think that would be a natural reaction.
So you think we need to be more realistic?
We have to be realistic.
Keep the naira at 155, between 155
no, but
and 150.
At
least for the CB official rate.
No, the reality is against a basket of currencies, the naira is doing well. Now, recently the sterling appreciated in value. If not against the sterling, against the yen, against the Chinese yuan and all that, the naira is doing. But if you tie yourself to a very strong currency, that currency appreciates. If you stay stagnant, your currency will depreciate. So you have to look at currencies in relative terms. The reality is that against the dollar, the naira will depreciate, slightly. Okay. Against the rest of the currencies, it will probably hold its own, because the rate of inflation in Nigeria is going to be 8.7%.
You think that's going to perhaps remain flat for the rest of the year? Okay.
No, not for the end. Till the end. By the end of the year, it will go up to 11%. There's no question about that.
Okay, let's quickly talk about. The Federal Open Market Committee meeting tomorrow. All eyes on that on the U.S. Fed. Let's hear your take on what the outcome is likely.
I think that they start tapering now. Larry Summers is out of the picture. Bernanke is going to want to do something about his legacy. If he starts tapering because of inflationary thing, then you are going to see an interest rate start to go up in the U.S. You're going to see a reversal of flows. Even emerging market funds that are here could begin to a little bit of it reverse, and that could put us under a lot of pressure. That could put us under a lot of pressure. The dollar will appreciate if Bernanke takes that position, and then the naira comes under some relative pressure. Okay, I guess we're going to have to see how all of that plays out. Fingers crossed on that. Thank you so much, Bismarck, for joining us. It's always a pleasure. Bismarck Rewane, Chief Executive Officer, Financial Derivatives Company. Look at Nigeria's latest trade data from the National Bureau of Statistics.